Okay, everybody, here we go. It's me, Gregory Mannarino, Thursday, March 27, 2025, pre-market report. In a few minutes from now, we're going to be getting a slew of economic data. It's all going to be fake, of course. It's all fake. This whole thing is quite an illusion. And unfortunately, the trajectory that we are on, not just here in the United States, around the world, is very bad. And the common denominator here is very simple. We've spoken about this repeatedly. It's central banks. Central banks are running the entire show, and they're literally bringing us to our knees right now, wherever you live, unfortunately, in the world, underneath living under the rulership of these institutions. They are the government. They run it all. They control the financial system, the monetary system, the markets, everything. And unfortunately, it's leading to our downfall. For the most part, I mean, the middle class, man, you know this already. We're being decimated. We're being eliminated uh, on a massive scale. And the rich, the 1 and 2 percenters, they're doing fantastic. Here in the United States, the gap between the rich and the middle class has never been larger. And that is going to get dramatically worse moving forward. You and I have discussed for how long now that we are clearly moving back to some yet to be defined new form of neo-feudalism, extreme haves, extreme have-nots. But anyway, look, man, before I even get to the data that I wanted to talk to you guys and girls about this morning, um, let me just say this. The United States, as we all know, I mean, look this up for yourself because I might be lying to you, is no longer the economic engine of the world. We're falling off the map. No one wants our dollars. No one wants our debt. No one wants our products. And it's an unfortunate thing. I believe the ball was dropped. It was dropped a very long time ago. And this actually appears to be extremely deliberate, the pathway that we're on right now. I mean, none of this is by accident. I think we can all agree on that. What happened here was either, again, another deliberate act or or something else. Let's discuss this. We have there are solutions to the problems that we face here in the United States and around the world. Now, with regard to the United States, this is what needed to happen, and it didn't. I've explained and we have covered here repeatedly from I don't know how freaking long ago. This trickle down effect that we're all sold. Let's make the rich richer and it's going to make us all prosperous. It doesn't work. Do we really need any more proof of that? Unfortunately, that's exactly what's in effect here to an enormous degree with President Trump, his executive orders and everything. He's not concerned. It doesn't seem like he's concerned at all about rebuilding the economy from the bottom up. The first thing President Trump should have done, okay, what do we all know is a wrecking machine for the middle class, a wrecking machine for the economy. What is it? You all should know what I'm about to say if you have followed my blog for any length of time. It's it's the act of artificially suppressed rates, which sucks the purchasing power out of the currency. It's a wrecking machine. Now, what President Trump should have done, instead of making all those promises during the campaign of lower rates, I promise you lower rates, is he should have been saying, I promise all of you to return purchasing power to your currency. He said the polar opposite. Again, when you have the mechanism of rates dropping, central banks in here buying more debt, devaluing the currency via the mechanism of artificially suppressed rates, we all lose. And the economy loses. And President Trump knows this. He has to know this. But that's what he promised you during the campaign. And that's unfortunately what he's calling for now, as you all know. Lower rates, lower rates, lower rates. Same with Elizabeth Warren, the other beautiful woman, okay, and of course our Treasury Secretary, Scott Bessent. Big problem here. If in fact President Trump would have started to return purchasing power to the currency, okay, this would have allowed us here in the United States to rebuild the economy from the bottom. Usually suppress rates, currency purchasing power destruction enriches the 1 and 2% via a mechanism called the Cantillon effect. Okay, please look this up for yourself if you're new here. Okay, this is in full effect right now. What's going on here is every mechanism to continue to enrich the 1 and 2%ers, the corporate elite, the banks, the deregulation here across the board, which we're seeing with regard to the financial system, allowing them to do whatever they want. You think they're not going to take advantage of you? Of course they are. And that's exactly what's going on here. So, two things, really. And I know it's probably too late for this. Okay, people ask me, okay, all the time, Greg, where's the solutions? Where are the solutions? The number one way we could fix this, okay, honestly, is to return us all to what we are guaranteed in the Constitution of the United States, and that is a sound money system. Does this sound about right to you? We have been stripped of that. We have been robbed of that. We went from a wealth-based system backed by gold, okay, to this fiat system. Fiat meaning it just is. Debt-based system, and that's when we started to lose, and the effects of that are dramatic, and we're seeing it now unfold. So just to recap real quick, what President Trump should have done, and it may be too late at this point because I don't think he has any interest in this at all. It doesn't appear that way because, again, what is he doing? He's calling for lower rates, and he's pushing this, and we know the Fed's going to do it. We know the Fed is going to lower rates. They already told us what's going to happen. They always tell you in advance of what's going to go on here. And this will allow the Fed to get stronger to inflate again. How does the central bank lower rates? It has to add digits to a screen, and whatever amount they see fit, they have to get into the debt market and buy the debt. Now, we have to talk about the debt market in a moment because we're getting a warning sign here. All right, just hold that thought real quick. So President Trump should have, number one, instead of promising people lower rates during the campaign, in which he is now is demanding it actually, he should be saying we need to return purchasing power to the currency, rebuild the middle class, rebuild the economy. You can't have your cake and eat it too. Wealth must be taken from one place and moved to another. People don't understand these concepts. These are very basic economic and financial concepts. Again, I'm going to repeat myself for the millionth time. To have a strong economy, you must have a strong currency. We don't have that, and it's being stripped further away from us. To have a strong currency in this debt-based system, you need to have a corresponding rate of interest high enough to support the purchasing power of the currency. Does this sound right to you? People know the truth when they hear it. I think we're on the same page, but we're not seeing any of this here. Further destruction of the currency via the mechanism of artificially suppressed rates, it's going to destroy the middle class and destroy the economy faster in favor of the 1 and 2%ers via the Cantillon effect. Okay? Now, again, I'm not going to go over the Cantillon effect. I want you guys and girls to look this up for yourself, especially if you're new here. So that's what really should happen, number one. Number two, instead of hyper-ballooning the debt, okay, a lot of you believed that the debt was going to shrink. The same concepts were put in play during President Trump's last tenure. He told everyone, and please look this up for yourself because, again, Greg may be lying to you. We were told that tariffs were going to shrink the trade deficit. We were told that tariffs were going to pay off the debt in 3 years. Okay. It didn't happen. In fact, the polar opposite happened to a magnificent level. What's happening here in the United States is, again, we are now in a kinetic war. Let me show you something real quick. I want to show you this. This is from World News, and guys, this is no secret. President Trump is, in fact, following through on his promise to annihilate the Houthis. So, U.S. airstrike campaign targeting Yemen's Houthis rebels intensifying. This is today. Now, let me read this to you. The Trump administration and its new airstrike campaign appears to be more intense and more extensive. New airstrikes are becoming more intense and are far shorter over a shorter period of time. A larger number of strikes is to be expected. The Trump administration is allowing Mideast-based U.S. forces to launch offensive strikes at will. Now let us move forward here. As you probably know, a lot of you wrote to me about this. U.S. did deploy long-range strategic bombers to the region. U.S. military has deployed long-range bombers at a strategic Indian Ocean air base, blah, 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 whatever. So the war over there is costing us hundreds and hundreds and hundreds of billions of dollars. We're ballooning the national debt. And who's paying for it? There is no national bank account, which President Trump alluded to yesterday with his move towards a central bank digital currency. Okay, people, wake up. Okay, this is obviously a move here where President Trump has taken to allow digital payments. Not for you and I just yet. We still can transact in paper. But this is a big step. We're being bridged into a new system. If you can't see that, then I am sorry. You need to do something about helping yourself think a little bit here. The United States bank account is the Federal Reserve, who is not federal and has no reserves, and is willing to inflate the debt to heights you can't believe because it makes them stronger. Again, this war here is not a war on terror. Or a war to keep shipping lanes open. It's a war to allow the central bank, in this case the Federal Reserve, get stronger by inflating the debt. What is the single product of every single central bank? It's debt. The more debt they issue, hold on to issue, or are allowed to issue, the stronger they become. Same mechanism with regard to artificially suppressed rates. It allows them to inflate. It's their goal. It's their end game. So, two things. President Trump should have, and it doesn't look like this is going to happen in any way, shape, or form, return purchasing power to the currency, which would rebuild the middle class, rebuild the economy. That's being sacrificed to allow the 1 and 2%ers to become richer and enrich the Federal Reserve, allow the Fed to make them stronger. With regard to war, build up to war, expansion of war, whatever else is going on, this is another mechanism to allow the Fed to fulfill its goal, to own it all, to be the lender and buyer of last resort. Anything else to the contrary that you believe, you drank too much of the Kool-Aid. You understand? Now listen, we have a couple of other issues. Let's just talk about this. The on and off tariffs campaign seems to be, it's kind of laughable in many ways. So President Trump has announced 25% tariffs on finished cars and some parts. Now this is going to happen apparently on April 3rd. He still has time to flip-flop again. All right. We'll see where this actually goes. President Trump is trying to block Canada's effort to boost Europe ties. Okay, this is part of this economic war that we are in. At the same time, President Trump is maybe looking to reduce tariffs on China so he can put together some kind of TikTok deal. You really, is this really what you're interested in? Okay. Anyway, look. This is what's happening right now in the debt market. Now, up until now, all we have had is a normal corrective phase in the stock market, but the debt market is sending us a warning. This is the 10-year yield. It's reaching a critical level here. This rising of the 10-year yield, which you've been seeing as of late, doesn't have me rattled. It shouldn't have you rattled. But this can get out of hand. The debt market is on a knife's edge. It could implode at any moment here. That's another mechanism why we're seeing more war, currency devaluation to fuel the debt market, fuel the debt system. You understand? Because without this, you already know what I'm about to say. We go back to a Mad Max scenario, unfortunately. Again, we can fix this. We can fix this by returning to a constitutional money system, a gold-backed system, or if President Trump was so inclined to dramatically raise rates. But it has to be done now because there's a massive lag effect with how this works. I've covered this a million times. Anyway, look. So a warning. This is a warning from the debt market. Stock futures this morning, at least before the economic data, which it probably is out now, this is what we were looking at. I don't know what it's doing right now. The dollar is still holding above 104, a critical level with regard to the relative strength of the dollar. Again, on an absolute strength, in other words, purchasing power, the dollar is being systematically decimated. And again, the destruction of the dollar is a mechanism to bring us into the new system. Every single executive order so far via President Trump is pushing us in that direction. Again, the pacifier is, okay, don't worry, we're not going into a central bank digital currency. We all know this is a lie. We all know. In fact, most of you do. I ran a poll. 88% of you do realize where we're going. There's some of you out there, 12%, that are really drank too much Kool-Aid. This is what commodities were doing this morning prior to the economic data. Bitcoin, cryptos. With regard to this, I hear you, and I did what you asked me to. On my website, traderschoice.net, it's there right now. Link in the description of this video. You will see I've done a breakdown of Bitcoin and XRP with a bullish or bearish call. I've also done a breakdown of the S&P 500 with a bullish or bearish call and specific ways to trade it. Take advantage of this stuff, people, because I got your back. I'm trying really hard here. So listen, what do we got? What's going on here? Understanding that every single thing we're seeing here is deliberate. The attack on the middle class is worsening. The attack on the economy is worsening via the mechanism of currency purchasing power destruction. You lose. There's no winning here. President Trump and no one else can tell you that. Again, it's a wrecking machine for the economy. And look around you. Look at the world right now. Look at every so-called developed economy being forced to suffer under its respective central bank. We're all in the same boat together. That's the common denominator. You understand? We need to turn this all around. But there's not a single world leader with enough guts to tell you the truth, to tell you that it's central banks running the show. They're the ones pulling the strings. They're the ones destroying the purchasing power of the currency. And you have world leaders here working with central banks to allow them to inflate on an epic scale. None more so than here in the United States. This kinetic war, again, hundreds and hundreds and hundreds of billions of dollars are being thrown. That's going to be $1 trillion very, very soon. Could you only imagine what this is costing us all? Where's that cash come from? We don't have it. The United States doesn't have a war chest. We don't have a bank. Our bank is the Federal Reserve, again, which is neither federal and has no reserves. They just have a printing press, or they have a screen they can add digits to. Does this sound about right to you? So again, without rebuilding the economy from the bottom up, okay, which means an immediate return of purchasing power to the currency, we can't win. No executive order can fix it. Nothing. You understand? I really hope you guys are starting to bring yourself up to speed as to what's happening and where we are going. It's twisted. It really, really is. All right, look, I'm going to let you guys and girls go, but I really want you to ponder the things that we spoke about here. Makes sense to you? Doesn't make sense to you? Greg, you're completely wrong. Let me know. All right. With that said, I will see all of you later, 4 or 5 p.m. Eastern for the live stream. And we'll cover the fake data. It's all fake. This whole thing is nothing but an illusion. You all know that. This illusion is going to get very real when the debt market itself implodes. And every effort imaginable right now that you can dream about is being utilized to prop it up. And what have I told you? Expect anything, even the unexpected, because they have to find a mechanism, anything, to inflate, to allow the central banks to take over the entire world. If you can't see that world leaders, including President Trump, is working directly with the Federal Reserve to allow it to inflate and therefore get monumentally stronger while we all lose, people, then I don't know what you really have to start to sit back and ponder. Use your God-given intellect, if just for a few minutes, and you'll see what I'm saying here is absolutely spot on. All right? It's time for action, people. It really, really is. And we have to resist central bank digital currency at all costs here. Because I can promise you, those of you that drank too much Kool-Aid, you better get up to speed on this, because that's exactly where we are going. 88% of the people seem to know that. You believe you're smarter than the 88% of the people that can see what's happening? Because if you believe that, then I really think you're lost. I'll see you later, as I said. All right, people, I love you guys and girls are all I got. Please share the video, comment. I want to hear from you. And if I've earned you a thumbs up, I'd appreciate that as well. See you.